Good morning, everybody.
Hi.
Adam Linneman, the Green Executive, and Sarah's here with me again. Happy Sunday. We wanted to talk a little bit about how profit can be deceiving.
Yes, what do you mean by that?
Well, okay, so when we're looking at a profit and loss statement, just because it's saying that you're making a profit in profit first terms, that's not really the case. And there's other documents that you really need to take a look at when you are determining this, such as your balance sheet and your cash flow statement. So you want to kind of touch on that a little bit, Miss Financial Guru?
What it comes down to is that when you run your profit and loss, sometimes it looks awesome. It looks like you have all this money, you have all this profit sitting there. And the question becomes, well, where is all that money? Because it's not necessarily in your bank account, right? So if you run your profit and loss, and even step that back even further and say, what is a profit and loss? Profit and loss is a snapshot of your money coming in and going out and certain types of accounts. So when you run that report for a certain time period, it might say you have all of this profit sitting at the end of the day, which is awesome. That's nothing wrong with that. That's a good thing. You might be wondering, where is that money though? And that's why it might be deceiving, because your profit and loss might say you have a profit, while at the same time over on the balance sheet, where that's more long-term things, long-term type of accounts live on the balance sheet, you might be paying on a whole bunch of loans. So all your profit is being used up by those loans. So to look at the health of a company, you really do need to look at both the profit and loss statement and the balance sheet. So both of those together help get a better picture of how the company's doing. And then there's other tools too, like a cash flow statement. And when we look at it in profit first terms, we dig a little deeper even than that. Beyond where the money is going in and out according to the books, but also, okay, what's the real intention behind this money and what is it really for? Like an example of that would be if the shareholder, being the owner, happens to get insurance when the other employees do not. Well, that shareholder insurance would be an owner payback. So we would put that into a category such as owner's pay and profit first term. So there is an analysis that goes on. It's not just running reports and looking at things. Definitely, once you get comfortable looking at a profit and loss, add in that balance sheet and see, okay, now where is my money going? And then in profit first terms, let's take it a step further. What's the real intent behind where that money's going?
Well, and this is why a profit assessment is really important, right? To actually have that complete, what do you want to call it? Breakdown, I guess.
Yeah, the health of the company as a whole company, not just we're looking at one aspect of it or another, the whole enchilada.
So don't get confused if, don't get confused. That's funny, remember, Anyways, don't get confused if you're showing a profit on your profit and loss statement. You really might not be having a profit in profit first terms. And, you could be having, like you said, 10, 15, 20 loans that you're paying on a regular monthly basis. And that's, in a sense, making your profit and profit first terms go way down. And we want to help you get that way up.
Right. You have to look at the whole picture, and that's what we want to help you do.
So have a good rest of your Sunday. If you have any questions, don't hesitate to reach out, and we will talk to you all next time. Take care, everybody. Bye-bye.
Bye. Reach out if you have any questions.